Hey, this is Elliot Wave Sage. Let's do a market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So the market really had a good rebound today. So if you were a buyer in these areas, you should be uh, very happy with today's price action and even the after hours price action, especially in the NASDAQ. So what do we expect? What's the expectation here? So as you can see, the cycle clearly reset without divergence. So you clearly had a three-wave move, and now you have a wave reaction. This wave was from July 19th to August 18th, so it's like 1 month. So we could see this connector wave last until sometime in September, mid-September at the latest. I do think at some point it will retrace and go lower. Now let's look at the bigger picture. So this is kind of what I've been forecasting, right? This C leg, right? And it could ultimately go as high as 440. And a lot of people, didn't understand or just seemed not possible. And so what has to go right to get to this level? Well, Nvidia would have to go, well beyond where it is now, even after hours. So the only way to get to this part, up here would be Nvidia would have to go even higher, probably 600-700, and the rest of the market would need to also pump, make new all-time highs, so on, in the technology sector. I don't think that's likely. So then the question is then, what could this be? So then you go, okay, it's going to be this bounce and failure that everyone expects, right? Everyone expects a bounce and failure, right here, right? Everyone expects this bounce and failure. But once you get this failure in the other indices, they look different. And I don't think this will happen. So what I think we'll ultimately end up seeing is a waterfall sell-off. And so I don't want to be part of this anymore because of what the strength in Nvidia and the strength in like Eli Lilly. These stocks have gone parabolic. They're like, there's no more room to the upside. We've talked about the concept of backing into a low. So let's explain what backing into a low is for a minute for people that don't understand. So let's just go to one of the growth stocks that were kind of obliterated. Let's look at like Roku was a good one. If I can find it here, and let's take a look. And I haven't looked at Roku in a long time. There it is. Okay, so Roku was interesting, right? It showed 5 waves down, and then it bounced. Okay, it bounced, right? A lot of people were calling new lows after this bounce failed and some kind of flat. Well, if that was the case, this was a connector for the entire move. So if it were to break 38, then essentially you're saying it's going to go to zero. The company is going to go out of business, right? Essentially, you're saying this is a massive head and shoulders, right? And it will go out of it. There's no more room, right? The rule of head and shoulders even says, there's no more room. So you're basically saying technically, it doesn't even matter what the count is, what the RSI shows, oversold, it's all irrelevant. It's just essentially you're saying the existence of the company is going to stay in business or go out of business, and so you back into a low, and then you buy it because that's what you're betting on. The bear case is it's essentially you have to say it's going to go bankrupt, and we know that wasn't going to happen. So it bounced, and this connector should hold, but as you can see, there's a lot of room for it to pull back. Right? It could still make one more high and pull back, which I think, if I'm just staring at Roku, it may do that in the next couple weeks, and then it can go from 100 back down to 44. So I think these stocks have a lot of room to correct. First off, and we mentioned that in also especially the Nvidias, right? and now we're in this final fifth wave, right? Now we're in this fifth wave. So look, this is all got so much space to correct. Apple, so much space to correct. So so there's so much space, so the market could still drop pretty quickly. But there is a floor, right? There'll be a floor just like Roku. There'll be a point where you can't go any lower. But right now, that's not the case. But I think the opposite is true. I think now we're in a situation where we really can't go much higher because the market caps, the valuations, the parabolic nature of the move is too vertical, right? I mean, this is a parabola, and it's now finishing up. I mean, it isn't going to go to infinity. It isn't going to go backwards. There's only so much more it can do. And then essentially the explosive nature, the kind of the, how can you say it, the blow off, which is essentially an explosion of emotion, caution to the wind, ends. And then it starts to unwind, and then it goes all the way back. This can't go much higher. That stock. Okay, that's just one stock. Well, there's a bunch of stock like that. I was just kind of scanning the market. Let's go to healthcare. Our friend Eli Lilly. Eli Lilly has defied it in this extended fifth wave. I mean an epic extended fifth wave. Look, it's as vertical as it can be. It's as vertical as it can be. This will correct down all the way back to probably 206. Mark this post. But everyone trying to short it has been getting blown up. But at some point, it just can't go. It just isn't going to go to infinity. It's going to end. This move will end, and there'll be an 85% correction. Parabolic moves, once they end, correct 85% from the high usually. So it may even go lower than this 200 because of the despair and people being trapped up here. Again, you're backing into highs. So so if you're predicting the market's going to go to these other heights, 500 or higher, you're predicting those stocks are going to be even more vertical, which I don't think can be. Or if those correct, other stocks are going to make up the difference, which I don't think that's the case either. So then you're in this situation here where is it going to bounce to 510 and crash, or are we already in the B wave? I think that's the decision. I don't think you're going to get this pullback to new high. I think if we pull back, I think the floodgates can open very rapidly, and you need to be aware of that. The Hang Seng is telling you that. The banks are telling you that. The banks are really weak, guys. We saw some of the banks, Schwab, 3 waves, rejection. If 44 breaks, it's going to 16. We were looking at PACW, finally ended its 3-wave move, and now it's pulling back, right? Could it break the $2? The KRE finally ended its 3-wave connector, and now it's heading down. Bank of America, we've been waiting for this low to break at 26, and we're really close. And in fact, we may be right at the trend line. We just broke it. Very bearish. 3 waves. What is this telling me? It's telling me the Bank of America is heading to 18. So this is telling me there's a financial crisis on the horizon again with the banks. These banks are weak. Wells Fargo, the 2 finished. Now we're in 3. 26. These banks don't look good, guys. They don't look good. Hang Seng, surprise to the downside, right? Was looking for this rip. I don't know. I don't think we'll get it. What if it's done? And what if it continues lower? This is going to be much more downside, right? But what if it breaks 14? Then floodgates, a massive crash in China on the horizon. We already showed you with crypto that I thought Riot and Mara need more downside, right? So more downside. So I think when I look at this market, I respect the fact that this B is coming. So you have to understand, this has always been my forecast. We're going to go lower and break this low because of the unorthodox bottom without capitulation. no RSI reset. The RSI is lower here and not here. So you don't have that capitulation. So we need to respect the fact that this could be finished. Now, we have to respect that possibility. Okay? Some other things I saw today that bothered me. The Dow Jones really isn't reacting, right? It's stuck. Like all this bullishness, well, this needs to get going. If this can't get going, well, guess what? It's a 1-2, 1-2. And you know what wave 3 of 3 is. This is a massive trend line that goes back to the low, right? Goes all the way back. If that breaks, it could be a waterfall cascade sell-off. And in fact, this be truncated, and it's not going to come up to this level. I don't like the price action in the Dow. It's not responding. And there's a lot of underlying stocks today that didn't rally, that didn't participate in this euphoria. So there's a lot I'm concerned about. So you need to respect and understand that this B is possible done here. To get up here, we need Eli Lilly and NVIDIA to go much higher, which I don't think they can. So I think this is kind of where I'm cautiously optimistic, or I say pessimistic here, because I just don't like what I'm seeing. Now, if I would have saw broader participation in the rally, and I didn't just see a blow off continue in those names, and I would have saw strength in the banks, strength in some of the healthcare that was weak, then I would be more bullish, but I'm not. So I'm more concerned. Am I ready to call the peak? Not yet, but we need to see how the next couple weeks play out. The surprise would be we peak out at Jackson Hole and crash. So you can't rule that out. It's unexpected, but if that were to happen, then certainly we've entered the next phase of this bear market, because then this is just an impulsive nature. It's still the same wave. It's in some ways it's just a 1-2, 1-2. So there's a lot to be concerned about out there, but there is a lot of euphoria. So great, feels good. If you bought when I mentioned to buy, you made a lot of money in a short period of time. Right, you made a lot of money in a short period of time, right? All these areas. Now, I don't like what I'm seeing, so I'm out for those reasons I just showed you, and you got to do what's best for you. There's still a chance that it could still go higher, but I think the only way that goes higher is if you believe Nvidia is going to go to $600-700, and Eli will go higher, and the banks will start to really rally. So the Federal Reserve's really got to come out with something special on Friday to change that. Now, gold and silver, silver was pumping. I think silver is very interesting. One, it's at resistance again. Every time it hits this trend line, it gets dumped, right? But eventually, it should break out of this bull flag. If you look, it's A, B, C, D, E, right? E is down here. So would it surprise me that it's not this bullish nature and we'd still do something like this? Sure. So am I FOMO into silver right now? Only because the fact that the dollar should continue to weaken a little bit. We could still see more upside in silver. So I think silver could still go higher as long as the dollar is going down. But at some point that will end. And so if the market's going to go down like I showed you, even if silver were to make it to a new high, it will come back down. But I do think it's going to have a lot of trouble right here. The weekly is very interesting. RSI, price action. We're right on the trend line. Now, if we can break through that, then we should see a push to $30. So that's something to keep an eye on. This. We'll see. So I think the next couple days of price action is huge in silver, huge. To know that, but if you were like me and long silver, you already had profits, so just take it. I'm just taking it, and I'll look to get back in when it's a little more clearer. Gold, again, you have a lower low. It should hit 1796, break this wave 4. So this is still showing me there's more downside coming in gold, despite this little bump pop up here, and it could also be an AB, a WXY with an AB structure. So it's a different count. So we did see the 10-year pull back, right? We did make a higher high. So what does that mean? It means we have a whole catastrophic sell-off coming soon, again in treasuries, not before we get this, I believe we'll come back in this kind of three-wave move. I think initially it's bullish for the market like it was today. It then turns bearish as people panic in the treasuries. So keep that in mind. Same thing here. Could be bullish and then bearish. And then, but at some point, because of the higher high sequence, we are going to see rates in these unthinkable areas, which will probably correspond with the bottom of the bear market and the secular low potentially in technology. Now, the thing about technology is we have made a lot of distance. I had shown the quarterly RSI doesn't really support a mega crash. Let's go to the quarterly RSI. So what I think could happen in technology here, even though we do have this crossover, as you can look here, we have had crossover before, and then it gets kind of stuck as we get consolidation like you had here. So we could see a dramatic pullback, but the low respected in technology. And we do have an impulse off the bottom, which is different than the SPY count. So we may not see this low break. We may see just a deep sell-off, some erratic price action, something like that. So just keep that in mind. So just keep that in mind. Of course, the bearish count is it's some kind of massive, 5 waves, 1, 2. But again, for us to get down to these levels, you're going to need the stochastics to behave in a way we've never seen before historically. You would need this to make another low, make another attempt to come back down to these areas, these lows. And we just haven't ever seen something like that before. Not to say it's not possible, and I'm not saying it's going to crash like that, but I do think, as you can see, there's a lot of room to correct. A lot of white space here. And again, here you have the unorthodox bottom. So what if it is the unthinkable and we do come back and break this low? That would surprise me a great deal. But if rates are going to go as high as we think, then this shouldn't be surprising. So I think you have to pay attention to this here, because to go to these prices, you've got to believe NVIDIA is going way beyond where it is now. It's hard to believe, right? I call it, instead of backing into the low, you're backing into a high. And this could be an impulse. I could have it like this. Right now it's 3 waves, which means it could be a 1, 2, 1, 2. The other option is it's just a corrective structure that's going to play out, something like this. And then of course we'll bounce. And then we just kind of grind lower. And this just kind of continues until the market's ready. So you got to be prepared for that too. The SPY, different count, clearly 3 swings, and you can put the W here. It doesn't really matter. I'll put it there. This easily can be over, and this could make a new low, unlike tech. The Dow Jones, again, looks very 3 waves, and this could make a new low. The Qqs doesn't have to make a new low. IWM, we had the warning sign in here. I said if we came back within that consolidation, it could easily come back down. And then if we were to break this downtrend line, then we could be looking at, X being done here, and we're going lower. And again, this will easily make new lows, the small caps, especially if rates are going to go up. So could it be done? It's possible. So we don't know the future, but we need to respect this bearish scenario because of some of the other market dynamics in how weak some of the bounces were in some of the stocks, despite all this euphoria. You didn't have that broad participation. So got to be careful. You got to be careful. So these are really important pivots in the end that need to hold. But once they break, I think you need to be prepared for a massive sell-off, and maybe even a historical sell-off. So you got to be careful. So if you're just like, oh yeah, it's just gonna do this, and we're all back, like you better be careful, because this can easily turn into something far more devastating when we break if we break that, of course. And then if we do continue higher and we get some broader participation, which maybe after the Fed meeting, then we can bring back, maybe this scenario is more likely. But again, this will come and this will end. This will happen. This is going to happen, guys, more than likely. I know people can't believe it, but it's going to happen. The interest rates are telling you it's going to happen. The dollar index is saying it's going to happen. You got stocks like Eli Lilly and Nvidia are telling you it's going to happen. But the question is when. Again, oil is coming down here. This has got to be deflationary risk off for the market, right? The dollar index I mentioned. We have this higher high coming, right? This higher high, right? But what if it doesn't stop, right? It may already be done, that swing, right? Early. And we go to the final area, right? My final area is here in the dollar, right? So we have three swings. We have the divergence erased, even though it doesn't look right, but it is a three-swing move. What if it just keeps going to this area? What do you think is going to happen with the market? Markets could be under pressure. So you got to respect the bear case is all I'm saying. You can't be too complacent right now. Historically, September and October are the worst time a year for stocks. The VIX it should finish this inverse head and shoulders and break out. This box is no longer relevant. Should break out, and now we're looking at 26, 27 VIX. This should happen. Now this could go down a little more, right? So don't expect an immediate, spike. There are some gaps. Perhaps we'll fill them. Keep the market rally going a little bit more. But I do believe at some point these lows are gonna hold. This will come back up, and then we'll break out of this pattern, this massive pattern, reversal pattern. And you could use your imagination how high it goes from there. Look at Volmageddon 2018 for the same kind of pattern. Okay, so that's what I want to say about the market. I just would say be more cautious. Data is different than it was 24 hours ago. It does feel good, this bounce, but you have to bring the cash register and then decide what's best for you. And decide what's best for you, because what's best for you is different than what's best for me. Okay, so then let's look at some of the other sectors and just see if there's any other clues out there. So then ExxonMobil, not looking good. Okay. Couple others I got out of already. Bor, wasn't looking good. Too many 1-2s here. Probably we're in some kind of some kind of fifth wave. This is just too many 1-2s. It's too bullish for me. As you can see, we've already reset, the cycle pretty much from this low here. So to me, this entire move is over. So I don't really want to be in this trade anymore. My guess is this daily, you look how oversold it got. So I have a feeling 1, 2, 3, 4, 5, something like this. So again, I'm just looking at, these are just some things I'm seeing in the market right now. If that's the case, it could come back down to $3 in the panic, especially if oil is going to drop the way I mentioned. Schlumberger, we do need to retrace this move, and I do believe it will come back. So I don't like it. And of course, if if we break that low, this could be just a massive flat correction and we come back to 39. So you just don't know. You know, I just don't like this price action here. The discretionary was getting obliterated. Some stocks. McDonald's is another historic stock that's in a grand super cycle end of life. So it's seen its best days. Its best days are almost over. This is a historic stock your great grandfather probably owned, and this move is almost over. Just like Eli Lilly, I could just move this label and call it finished even right now. This will bring McDonald's down to $119. So this is what we're talking about, guys. This is why I'm saying, you know, again, massive bearish divergence on the weekly. This is what I'm saying. These parabolic moves aren't sustainable much longer, right? Maybe it could go a little bit higher, but its best days are behind it. Right? And it goes to the wave 4 low, which is 123, or 85% of the top. So these are the things. So McDonald's is another one. It's out of gas. It's running out of gas. And there's a bunch of like historic stocks like that out there. Okay. Everyone's favorite, Chipotle, I gave the short area a long time ago up here, and it's struggling. I think it could come all the way back sub 1,000. Okay, I'm just saying. These are stocks that I'm just looking at. Again, Carvana, of course, came off the lows really strong. And you have to respect, what if this is just a corrective move? What if we don't get a 5, right? Now, if we can get a 5, that's good for the bulls. But then it could pull back. It go from 60 back down to 20. If we don't get a 5, then it could become another go to 0 at 3, you know, because it's just a corrective bounce until you get this 5th wave. All right, so then consumer staples. As you know, Celsius is finishing up wave 5, and they'll have to correct the whole grand super cycle, so that's not good. Monster Beverage. Again, depends how I label it. It's at a historic top as well. Wave 5 of 5 of 5. Could drop all the way back down to 36. Again, there's a lot of stocks like that, guys. All right. Nothing else in consumer staples. Crypto, I told you that, you know, we have some suspicious price action, but I do call this 5. I do think it's going to bounce and come back here. So this is bearish, and then we could trade the chart as it is. Maybe Coinbase can get up to a new high. But hey, if Coinbase only shows 3 up, it's at risk of breaking 33. And then it can become a go to 0. Go to 0 chart. MicroStrategy, let's look at MicroStrategy, right? MicroStrategy, again, shows 3 waves. If it can't bounce and break this high, it can come back down, break 135, and then it's a go to 0 chart. Okay. GBTC, again, this could only be a 3-wave correction, and then this could come back and break the low. So you got to be careful. We need to see this break 22. If we don't, it's still just a corrective move, right? This is just a bullish interpretation of that. So you need to break that right now. So it's just 3 waves, which means it can still come back down potentially. So that's why you got to respect the downside case as well as the bull case. Then looking at the rest of the market, triple levered funds, Qqq, nice bounce. That was a great trade for me. But again, it could continue higher even tomorrow to finish. If we get 5 up, then it could bounce and come up. That'll extend the bounce. But again, if we could just finish in 3, a blow off tomorrow, then it could just be corrective against this downcline and take another leg lower. SDAO, we mentioned this scenario. This is a bearish scenario where you pull back in B and then you launch in C, something like that. That's very bearish for the market, though, and even more bearish is that you're in this 2, and this is some kind of A, B, C, and you really come up to like 30, 33, 34 even. So you've got to respect the bear case, right? The bear case. But there's no real good setup on buying this, right? Shorting this or whatever. Um, it does look like 5 waves up, so it does look like we need this high. I would wait a little bit. I want this is way too shallow of a connector. Hopefully, we can come down to 23. So that implies maybe some more upside in the market. And yen, as I mentioned, broke this low. Again, I'm showing a more bullish interpretation of it, um, but don't let that fool you. It could easily here, as you can see, here you could have this A, B, and this C play out and break that low. And if it does, then this is a connector for that move, and China could really have a massive sell-off. So we need to really watch that. Okay, but I don't like the setup in it anymore. That's why I'm not in it, and I wasn't long in that anymore either. Healthcare behaving strangely. Some of these, like pod, is essentially straight down. I think now it's some kind of grand super cycle flat. So I dumped that. Again, this is where you got to do what's best for you. I mean, will it bounce? It probably will, but I do think now this is the setup on it, and this 3 can end at any moment. But I do think it's something like a massive flat in the grand super cycle. We could see it go to 146. I don't like trading it anymore. And again, just not like what I'm seeing. mRNA, someone was asking, never really got to our buy area. It should be finishing this 4 now that with this bounce, it's getting rejected on this massive, resistance. We get this pullback here, get something like that. We'll see how that goes. As long as divergence is maintained, and we erase divergence on the higher time frame. Then technology, very bullish. Wolf's making a comeback, and benefiting from the semiconductor industry, as you can see here. But I still don't like trading it. AI never really got to our buy area. Now you have a big, this is a pivot, so 28 has to hold. If it doesn't, then this is just 1, 2. That means we're going to come way down here if that breaks. So keep that in mind if you're trading it. It could be a 1, 2, and you get that. Or it could have bottomed, and it could surprise everybody in the next couple days as the semis pump. But I do think you have to, again, respect that we are in 2. Now this low at $10 should hold, but it could be very sideways as the rest of the market is gyrating around. Do I think that low is going to break? I don't think so. You would have to call it like a massive flat, which would be very unusual. So I don't think you have something like this, right? I wouldn't call, where that's your let me get it right here. Sorry, something like this. So I don't think I wouldn't call it that, but you gotta think about that option too. But I do think this bounced where I expected it, and now it's a pivot, and I would get out of this if that broke, if that stop loss broke. Okay, so nothing else in technology. All right, so I'm going to end my video now. So what do we expect? I think the market has a good chance of continuing higher for the next week or 2. And then a very important decision is going to come at that point. We'll either pull back in a wave 2, or we'll have this waterfall sell-off, right, that I'm talking about. So what we're either going to see is more upside. So we're going to see this end at some point. You're going to pull back, right? Even if you're bullish, right? Even if you're bullish, you got to get this pullback in September, right? At some point, you get this pullback. But if we pull back and break that low, I think all hell can break loose in the market. So I'd rather be on the sidelines for that. I'd rather be on the sidelines. And then if we pull back and we could break that high like that, then okay, let's get back in the market. But if we are when we do pull back, and we will, and we break that low, then you'll be happy you're not in the market, because I believe there'll be a lot of panic out there as that unravels. So that's how I would play this right now. Should have bought last week. Should be making money right now. Now you should be thinking about getting that profit and then just letting the rest of this play out on the sidelines. That's how I would trade it, but you guys do what's best for you. That's all I got.